You know what could send the dollar, stocks, and even Bitcoin soaring this week? The answer lies in the Federal Reserve meeting, the American central bank, happening in the coming days. And that's what I'm going to break down for you today, along with several other important stories from the world of finance, so stick around until the end, because there's information here that could directly impact your wallet. Let's start with the United States. Investors around the world have their eyes glued to the Federal Reserve meeting this week. The general market expectation is that American interest rates will be held steady, with no cuts and no increases. But what really matters here isn't necessarily the decision itself, it's the tone that accompanies that decision. Any signal about possible rate cuts in the coming months could shake global markets significantly. This happens because when the United States signals rate cuts, the dollar tends to weaken, and money that was parked in safe American assets starts flowing into emerging markets like Brazil in search of higher returns. On top of that, this movement also tends to directly impact Bitcoin and other cryptocurrencies, since investors look for alternative assets whenever the interest rate landscape shifts. So keep an eye out, because a single comment from the Federal Reserve Chair can trigger volatility across virtually every market on the planet. Now let's talk about Brazil. Today marks the release of the mid-month CPI reading for July, known as the IPCA 15, which is the preview of the official inflation index. This number is extremely important because it gives an early look at how prices are behaving in the country before the official index comes out. And why does the market care so much about this? Because this data directly influences expectations around the central bank's next decision on the benchmark interest rate, the Selic. If inflation comes in higher than expected, it increases pressure for the central bank to keep rates elevated for longer, or even consider another hike. If the number comes in more controlled, it opens room for the market to bet on rate cuts down the line. And this affects everything from savings accounts and government bonds to stock prices, since higher rates tend to make fixed income more attractive, while lower rates tend to favor stocks. Speaking of stocks, let's move to oil, another topic shaking up global markets. Oil prices remain under pressure, especially following signs of easing tensions between the United States and Iran. This is news worth paying attention to because oil impacts virtually the entire global production chain. When oil prices fall, it tends to directly benefit companies that heavily depend on fuel, like airlines, shipping companies, and manufacturing in general, since production and logistics costs go down. Beyond that, falling oil prices can also help ease inflation in several countries, including Brazil, since fuel directly affects the transportation cost of nearly every product that reaches the end consumer. So this is definitely a point worth keeping on your radar, especially if you follow energy sector and industrial stocks. And speaking of the Brazilian market, let's head straight to the stock exchange. In the last trading session, the Ibovespa, Brazil's main stock index, climbed again and closed above 175,000 points, showing a certain optimism in the market despite an international scenario that remains uncertain. This upward movement tends to reflect a combination of factors, like more positive expectations around interest rate policy, good news coming from abroad, and also the performance of specific companies that make up the index. It's worth remembering that the Ibovespa is made up of the most heavily traded stocks on the Brazilian exchange, so when it climbs consistently, it generally signals greater confidence from investors, both domestic and foreign, in the country's economic outlook. And to wrap up today's overview, it's also worth highlighting what's happening in the tech sector, with all eyes on the earnings reports coming out this week from giants like Meta, Microsoft, Apple, and Amazon. These earnings reports are hugely anticipated by the market because these companies carry enormous weight in the major American indexes, and they also serve as a direct benchmark for the entire tech and artificial intelligence sector. A stronger than expected result could boost not just the stocks of these specific companies, but the entire tech market as a whole, including smaller companies operating in the same space. On the other hand, weaker than expected results could trigger a wave of caution among investors, affecting overall risk appetite, which could also ripple into emerging markets like Brazil. So, to sum up this scenario, we've got the Federal Reserve deciding the direction of American interest rates, Brazil releasing a crucial inflation figure that will influence the Selic rate, oil prices dropping due to easing geopolitical tensions, the Ibovespa maintaining an upward trend, and big tech companies about to release earnings that could move the entire technology sector globally. There's a lot happening at the same time. And that's exactly why following this news closely makes all the difference for anyone trying to understand where the money is flowing and where the opportunities are in the financial market. If you want to stay ahead of the market and never miss a beat, hit that subscribe button right now. Here on The Freedom Escape, we post multiple videos every single week, bringing you the biggest stories from the world of finance, straight to the point, no fluff. Subscribe, turn on notifications, and drop a comment below telling me what financial topic you want covered in the next video. See you in the next one.